Hey guys, welcome back. We had a good Wednesday. It's March 30th. SPY's coming down here. We got about 15 minutes to close. We're going to talk about GameStop options. I think the option chain froze. That's what those in Discord were claiming. Mullen's running. Sub up, like up, comment down. Happy Money sticks around. We have a Twitter you can follow us on at HappyMoneyYT, as well as a Discord server that's free to join. Link for that is in the description. As well as that Twitter link. SPY's coming down here. This is, I guess, the biggest divergence from the bonds and the market in many years. So, yeah, market, it's starting to show signs of correction needing to come, as well as the yield curve is inverted, or it's kind of teetering, I think, back and forth. So not sure how much longer this SPY can be propped up. This was an epic move, though, starting middle of this month till now. Got rid of that divergence actually from back here, but now it looks like it's filling that gap. On the hourly, it's flipped bearish. We've got red under the 9 moving average and a bearish MACD. We had this divergence back here on the RSI, higher highs. Wait, no, that's not a divergence, I'm sorry. Tesla, there was a divergence. I have a trade in Tesla. Tesla has this divergence. Now it's also bearish on the MACD. And this has had an even more epic rally. And this actually is, this is a divergence from here to here. Longer time frame. And if you're drawing a line from tops, looks like it's probably right about at that spot. See what it looks like. I haven't drawn it yet. Shoot. Maybe not quite, but a little less. A little less. Yeah, not quite there. We'll see. Looks like it's probably teetering up there on Tesla. GME, Mullen running today. We called this out on Discord right here. I didn't take any trades, but I think some of you guys did well. Well done. Well done. I trimmed a lot today. Got in and out of stuff again, not quite like yesterday, but we kind of called this out yesterday a little bit, thinking that GME could kind of come down into the end of the week, starting with this, it's subtle, but this divergence right here on the RSI, this hourly right here and here. This is actually higher than this hourly. And then, of course, today they kind of confirmed it. Gap down, and then stayed actually pretty solid. Didn't just keep flushing through. It stayed held up pretty well, but we do have this red under the 9 now the bearish MACD. But today I was watching it because this was looking very similar to this day, where we had red under the 9 as well as a bearish MACD. I thought it could turn into this if by like 1 o'clock or so it started flipping up. And so I trimmed my bearish stuff with some profit, trimmed my bullish stuff, basically just reduced exposure quite a bit. And then when this happened, I went back long for next week, just because I thought we could be repeating that 324 day. But at any rate, I think we still are set up for another big move, probably the squeeze still, and just legging up. I'm not convinced that this is a pinch yet at all. The way this is held up today actually so strong is pretty impressive after having basically the biggest bull run it's had in like 10 days. Consistently, I guess, because it was what, 11 days, 10 days, green days. That hasn't really happened in many years. So yeah, I expect probably a little bit more of a settle down into Friday, and max pain's 150. We'll see if it stays there. I'm still thinking probably this like 160 range for close end of week, but I think that will just set up for next week. I think the RSI and everything will be cooled off by then. It comes down, but it could just consolidate even higher than that too. We pointed this out in yesterday's video. If we consolidate up high like we are right now with this high RSI, this is the highest RSI has been since back here in January 2021. Then, you know, something like this, which I don't think it's doing that at this point. But it's a little early to tell. Today is Wednesday. I think we'll probably kind of come down a little bit more first. Similar to this, you have a peak, and then you kind of have a consolidation, then you have a second rip. Same with here, you kind of had this peak, and then you had a little consolidation. I feel like if we were in a pinch, we'd be most similar to probably this one right here. And today and the next couple of days will probably be similar to this. And I think this is even, yes, this is a Friday to a Monday even also. This could be like our Friday and then Monday, Tuesday. Typically, GME doesn't run on Mondays though, it runs on Tuesday, Wednesday. So if it kind of keeps coming down, which what I'm expecting, I have some bearish plays in the short term, as well as bullish plays in case after hours. I feel like it's gotta have exposure for crazy after hours moves. So on GME, but yeah, my stuff on GME that's long is just for next week. Short, it's mostly this week, but yeah, looks like it's probably gonna keep melting down. I'd say volume's kind of tapering off also. Still good though, still good volume. Any kind of news and we could go crazy in after hours. So I don't have a whole lot. I trimmed quite a bit, which I am pleased with. Hard to take profits when you think it's just going to go crazy all the time. It doesn't just go crazy all the time. It goes crazy and then it settles down, then it comes down, and then maybe it's over, or maybe it settles and then goes crazy again. I guess we did quite a bit in here probably. Yeah, in and out of stuff. Closed some of my long exposure. SPY, to me, the market looks a little exhausted on this rally. BBIG, we had profits closed on that. Rolled my SPY call credit spread forward. BBBY, put credit spread, had profits on that I took. Then GME, I just got in and out a bunch of stuff. What I'm left with at this point is call credit spread is a bearish play for Friday. So it's a 170, 172.5 call credit spread. So I'm expecting GME to be below that by Friday basically, and this will be worthless. And then that $1,200 premium I got for it, I get to keep, and I don't have to pay back to close it out. Then there's this bullish play for next week. I'm kind of moving my bullish plays even higher. Just because I feel like this is more of a squeeze or the squeeze than a pinch. So premiums are costing less for more potential, but the probability of profit's lower. 26,000 on this one. That's if we're above 280 by next Friday. And then this one, what is this? Oh, this is another bearish play. This expires next week, next Friday. Put debit spread, 155, 160. And then here's a bullish one. This is 230, so a little lower price target. I want to get some lower ones just in case we do kind of max out at that 230 and this is a pinch. But these are down significantly now. Like I said, I bought these right on that rip. Just to make sure I had exposure, because at that point I had no exposure to the upside, and so I wanted to get some for next week, and if it didn't work out I was just planning on holding it anyway. So I'm holding it now. Spreads are really wide, so it's hard to tell what these are actually worth, but I will probably scale into these as well as some more on Friday if what I think plays out, and GME settles down, but it's still in a bullish formation, if you know what I mean. So if it comes down to 140 or so on Friday, I'm expecting this daily MACD to not clip bearish and maybe just to come down to the signal. If it stays bullish on that front, if there's no divergences, that's looking like it's going to keep coming down. If it looks like it's just kind of making a leg up, kind of like here or here, then yeah, I'm going to go long on Friday to get exposure for next week. Friday exposure will probably just be for the next week. And yeah, that's my plan. So broke new lows here, hasn't broken the low of the day, which is 168. Probably will though. It's 3:21. We got 40 minutes left. How do you make let's see, let me see what this is. How do you make $4,400 on GameStop when it's down 5%? Buy puts? No, especially not with the IV so high. Here's the covered calls, guys. They're up $4,000 today, 4,400. So this helps balance out the account a lot. Given these are in the money, and if we do rip, it's going to be crazy. But when you go up and you don't want to sell shares, but you want to profit off of the move, sell calls up there. And then when it comes down, it's the perfect hedge. My shares lost value. my covered calls gain value. So shares came down, but look, this shows the IV of it. Look, shares came down 4,900, and just the calls on them came up a whole 4,400. And if this just flattens out, it's likely that the call will continue to gain value for me, or rather lose value, but for simplicity's sake, gain value, and my shares will just stay the same, if you know what I mean. It doesn't have to make a move down for calls to lose value, the time premium. So selling calls on big rips is good. Even with GME, it's more, there is some opportunity cost, but if you have a lot of shares, it doesn't hurt to have some hedge and some profit on there. I have a limit sell for one share at 3,000. I have it for good till canceled, as well as extended hours, just in case there's some weird stuff going on, like possibly what happened yesterday with that halting into open. I looked into it more. It maybe wasn't as normal of a halt as I thought. There's a lot of question around what actually happened yesterday, because I don't even think it didn't do the full 10%. There's a lot of different types of limit halts. It didn't do the full 10%. And then there's also rules about it being in the first hour. They can't halt it, or it can't halt unless it's a big enough move. And then some people are saying it's a limit up, limit down. I didn't have time to look at it, but there's so many different ways that they can halt the stock. It's possible they halted it in a legitimate way and through their own criteria. Definitely didn't seem like it, but yeah, because it just didn't move enough to negate a halt. And then Don said in the options, there's a bunch of deep in the money calls that were bought up, rode the move up, and then basically right when it hit that 199, they just dumped them all, and that was just a massive amount of basically deleveraging that the hedgies had to do. And that's kind of a way to short it in a way. You just all the leveraging and hedging that market makers have to do on the long side, if you get rid of it, they can de-hedge, and that'll drive the price down. So not only buying puts, but just even selling your calls. And that works for retail and everybody. So when it rips up and everyone takes profit and sell calls, you know, that relieves pressure on market makers to continue to buy shares and hedge. So maybe that was a strategy they used there. Why it halted on the way down, extra weird, I'm not sure. But some weird stuff's going on. Then today, you guys in Discord were saying, I think during this whole section right here for like 30 minutes, their options were not moving at all. The options chain, the pricing, nothing was moving. They couldn't buy or sell options. The market seems like it's starting to break. Yeah, I think GME's in a spot. It's in a good spot. Even the SPY and everything, if it's starting to come down, this might be a pump before a big dip. Wow, SPY's really come down since I started this video. If SPY really crashes, GME might have a huge dip before the next leg up. I don't know how big that dip would be, but it depends on how bad the SPY reacts. The GME is coming down with it now, so we will see. At some point, they will inverse, I imagine, and the more this goes up, the more this goes down, and it'll just increase until worlds are colliding. Thanks for watching, guys. We'll see you on Discord. Good afternoon. Peace out.